that 33% of Americans have no money for retirement, and that 56% of them have $10,000 or less. And if you go across the board, it's 60. Is it 66? Yeah, 66% of them have $50,000 or less to retire on of their money, and so that's a pretty sad fact. And basically, baby boomers were told you need to have four streams of income when you retire. You need to have a 401k and let your company match it. You need to have a pension, work for a company with a pension. You need to have a savings account where you save up, and then you'll have Social Security. Well, let me address these. 97% of American companies in the U.S. do not offer a pension anymore. So only 3% of the companies still offer a pension, so that went away. In 2008, 60%, we took a 60% hit on our 401k with the market. So if you are planning on that portfolio helping you, your portfolio's down, you won't live long enough to see it come back. Then there is still Social Security. However, there is murmurs about getting 78 cents on the dollar, and that's the way to fix Social Security. And then you have your savings account, but we are the sandwich generation, so we helped our older parents through their Alzheimer's or their health issues. So we took off work and maybe took some out of our 401k for that. We took a big hit on our mortgage. A lot of them took 401k money out of that to not foreclose on their house. And then we have the generation after us, and we typically didn't want them to have student loans, so we sent them to college and we paid for the college. So our savings in our 401k has shrunk quite a bit. So I believe there'll be a tidal wave coming of baby boomers that need some solution, or they won't be able to retire. And the main people that this is a great loan for, this is not a good loan for everybody, but it's a great loan for people that need some assistance with their money. My dad was the very first loan I did 16 years ago, and he retired at 58. Him and my mother's prescription drugs was $100 a month when they retired, and 20 years later, it was $2,000 a month. So he had charged up all of his credit cards. He tried to do it the right way, and owned his house. And then he got, when he maxed out his credit cards, and you're on Social Security, it's hard to get a new credit card. So then he started deciding which prescription drugs to fill. So he'd fill my mother's and not his. And a lot of people are playing Russian roulette with their drugs. They're going to Mexico, they're going to Canada, they're going to veterinarians for their drugs. They're eating dog and cat food because they can't afford their medicine and food. So this is a great loan for those people, because my dad, the minute he got this reverse mortgage, he lived 11 years without the stress of where he was going to get $2,000 a month. A check came every month for his drugs, and he didn't have to worry about it. He planned for everything else, but he did not plan for how much his medications would cost. Now, I've given you that handout, and the other handout, everything you'd ever want to know is on this card. You would be an expert at reverse mortgage almost. So on the first part, I'll just quickly tell you that refinance. I'm going to give you some things that people think that it's not true. I even have a sign that I'm going to put on my car that says the truth about reverse mortgage. Everyone thinks if they are in their house, they have to own it outright and have no loan against it to do a refinance and do a reverse. You don't. I can pay those loans off. I can pay the first and the second off. I have a lady that makes $2,800 a month on Social Security. She pays $1,950 a month between her first and her second home loans. So I can make her quality of life a lot better, and she'd owe the same amount of money. I just move it to a frozen loan, basically an FHA loan that she doesn't have a monthly payment on. She still owes the same amount of money, she just doesn't have a monthly payment on it. So they don't have to own it all. They can have a lien against their house, and I can pay that lien off. A lot of people have trashed their bucket list. A lot of people don't think they can help their grandkids with a car or college because they can make it, but they don't have extra money. So this is a way to do those things. Also, with my dad's case, you can pay for your prescription drugs or any medical treatment that you might have. And some people are even buying, I'll tell you that down here in the bottom bucket, they're buying their long-term care insurance. If they have a spouse, you're both on the loan, and if they have a spouse that is in a nursing home and it's $6,600 a month, this is a way to get $6,600 a month. So that's kind of an easing of the refinance. The purchase. A lot of people don't know you can purchase a home with a reverse mortgage loan. Now, the easiest rule of thumb is you can either buy twice the house with a reverse mortgage or pay half the money. So just remember, twice the house or half the money. So twice the house. Let's say they moved from Chicago, they've sold their home there, they're going to retire here, and they have $500,000. They tell a realtor, I want to buy a house for $500,000. Why do they want to buy a house for $500,000? Because they want to buy cash and they don't want to have a house payment. How about if you bought $1 million house without a house payment? So that's a total different house in Williamson County between a $500,000 house and $1 million house. So you can do a reverse mortgage and it'll pay about half of it. It's an FHA loan that Ronald Reagan started this program to keep seniors in their homes, to help them stay in their home. Now, when I say you can buy twice the house, that's that way. If you want to pay half the money, the same couple comes from Chicago, they have $500,000, they buy a house for $500,000, but at closing, they come with $250,000. And then we get a $250,000 reverse mortgage. They're in the house with no house payment. They pay their taxes and insurance like they would if they bought it for cash. Okay, so that's how you can use it with a purchase. And the last one is a lot of certified financial planners are seeing that this is a tool, a financial planning tool. If they're not in great health or they don't really like their jobs, they're looking at Social Security at 62, they want to draw it the day they turn 62. What if we decided how much they would draw at 62 and they got a reverse mortgage and they got that money for 8 years coming in a month and they got to retire, but they didn't draw their Social Security and they waited till 70 to draw their Social Security. Now you can turn a reverse mortgage off and say, I don't want any more money. So in 8 years you can say, that's it, that's all I want a month, right? You get about 30% more money if you wait till you're 70 to draw your Social Security. Then it's just a nice way to time the market. Instead of the day you retire, you start drawing on your portfolio. You can decide when you want to draw on that portfolio. When the market's up, you can draw on it. You don't have to draw on it at a downtime. And also, in my husband and I's case, I have my budget down. I know we can make it. I know we saved enough and we have enough, but that's just it. But if I could make that line go away that's a house payment, we could go on some trips. We could hit the road, you know. So the last deal about the expenses is you can make one of your retirement expenses go away and stay in the same home. The back of the card shows pretty much the rules. One of the borrowers has to be 62 years old or older. So a wife can be 58, a husband can be 70, they can get a reverse mortgage, okay? They do have to pass. A year ago in May, it started, the NBC spot even said it started being a little stricter. They don't care about your credit score. They don't care about your debt ratio. They do care about your credit activity for the last 12 months. And are you going to have residual income enough to pay the taxes and insurance? So there is a financial assessment now that everyone would go through. I do want you to remember, if you talk to anybody or if you're thinking about it, the property has to be an FHA approved property. It can't be like, if it is a condo, it has to be an FHA approved condo. And there's about 5 of them in Williamson County of all the condos that are there. So you just have to know that it's an FHA loan, so it has to be an FHA approved house. You do remain entitled to the house. You do not sign it over to a bank. You're fully owned it. Only one of 3 things happens, and that's when the loan becomes due and payable. Either both parties on the loan die. And when that happens, we send a death certificate into the company, and we tell them, here's the listing agreement, and we put the house on the market. They give you 6 months to sell it. If you couldn't sell it for 6 months, they'll give you a 6-month extension. I am a person that got the extension and did this. So I know this works. I know this happens. Both of them are in the retirement or in a nursing home for 12 months consecutive. My mother was rehab a lot, was in and out a lot, and one of you can be there consecutive, but both of them are in a nursing home 12 consecutive months. Then that becomes, we need to put the house on the market, or one of the children can refinance and buy it. And then if you sell your house, you have to pay this loan off just like you would any loan on a house. So now is the fun part. So I'm going to ask you a few questions, and I have prizes. So when did Tom Selleck start endorsing this loan? Yay! Both of you knew that. Okay. Another one is, who started the reverse mortgage? Reagan. Oh, okay, good. Is it okay if I throw it? I'll try to pitch it. Okay. What percentage of Americans have $50,000 or less to retire on?
8.
Nope. $50,000 or less. So zero to $50,000. What percentage? Pardon?
56.
Yes. You ready? Okay. Okay. Yeah. 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 Have less than $50,000 to retire on. Yes. What's one of the conditions the property has to meet in order to get a reverse mortgage? Yay! This is kind of like the parade a little bit. Do they throw candy at your Christmas parade? Sore subject. Okay. Okay. I didn't go over this, so I won't. I'll just tell you a little bit about it. Okay. Let's see. They have done a lot. It's a non-recourse loan, so they've done a lot of tweaking of this loan to not harm anybody. Okay. So let's say mom and dad got a reverse mortgage and it was worth $1 million and the market fell. And they got a reverse mortgage for $500,000, and today that house is worth $400,000. Okay? If they wanted to sell it, they both were alive and they weren't in nursing homes, and they wanted to get out of the reverse mortgage or sell that house, they would short sell it basically. They'll take what you can sell it for, basically. It's a non-recourse loan. So there won't be any 1099-C to them. It won't hurt their credit. In fact, this loan doesn't even go on their credit. It's lien on the house. It's not a mortgage, okay? So just so you know that. And now let's say mom and dad did the same thing and they both die. Now you got heirs that owe $500,000 on a house that's worth $400,000. Well, what heir would want to take a loan out on that? The heir only has to pay 95% of the current appraised value to buy that house. So they'll basically short sell it to an heir, and it won't hurt anybody's credit, which I think is a real protection thing for the heirs. So that was one of the questions. And when is the loan due and payable? Give me one example when the loan is due. Sell the house. Pardon?
Even if you didn't sell it,
If you don't spend 7 months in that house, it's no longer your primary residence. If both people die, yes.
I said that first.
Oh, did you? Okay. Okay.
You just haven't had dessert yet.
Okay, so some of this candy now, I'm through with my part. If you'll raise your hand, if you learned anything today that you didn't know before you got here, tell me what you learned. What did you learn that you didn't know?
oh, well, what it is, actually, I
Okay.
never even heard of this before. Maybe
Okay.
right
Okay.
Watch TV.
Okay.
Watch TV.
Non-recourse, very important point.
I didn't know that you had that length of time to sell the house.
Yes, and I've even seen people get 18 months, yes. And the thing of it is, let me pass that to her if you could. The thing of it is when they first die or when you first are trying to sell it, you show them the listing agreement. If it's with a reputable realtor, they'll work with you. They don't want the house. They want the interest. They are in the, like Wells Fargo's, in the business to get the interest. They're not interested in turning that house. So anybody else learn anything they didn't already know?
You got very credible endorsement.
Yes, sir. Yes, sir.
Tom Selleck. He does a good job.
Well, in 16 years, I'm a retired CPA, and in 16 years, I've been doing this loan. I haven't found a reason not to do it ethically. I haven't found one time where it was the wrong thing to do, and if I ever do, I won't do it. But it is an FHA government-backed loan, and I just think it can be the answer. It's not the answer for people that don't need it, but it can be the answer.
So you think at 62, I would need to consider it?
I think it's a portfolio thing you need to think about, yes. And one thing is, get it, don't draw any money on it.
Yeah, that's you
Pay the closing cost. You got $500,000 line.
Yeah.
Get this, I didn't tell you this. You start a line, it's $500,000, right? And the interest rate, let's say it's 4%. It grows. The home equity line grows at 4%. There is no home equity line in America that I know of that grows. Yes, sir.
The video person has a question.
Okay.
Let's say that my parents were to try to or start the paperwork to get a reverse mortgage, but my sisters and I are like, no, you can't do that. Do the heirs play in?
Yes, they do with me. They don't with everyone. I will stop a loan. If an heir or an attorney, their attorney, in fact, or whoever is going to administer their trust is against a loan, unless we can get their buy-in, I will not do the loan. Because basically they're going to be the ones that picks up the pieces. So we either need more education or it's not for them, okay?
How does the interest rate work? Is it floating interest rate?
It's, there's two different loans. There's a fixed interest rate and there's a yearly adjustable interest rate. So,
Second question,
yes, sir.
you mentioned if the parties die.
Yes, both
and
parties die.
The lender steps in and sells.
The lender doesn't sell it, the heirs sell it, or the executor.
So if it's in a trust, the trustee would.
Yes, yes, sir. Yes, sir. Yes, sir.
Says here the borrower must pass a financial and credit assessment.
Right.
So if my wife and I only had a credit rating of say 590.
Doesn't matter about your score. I mentioned that. Doesn't matter about your score. It matters the activity you've done the last 2 years. Have you been late on a mortgage the last 2 years? Have you foreclosed in the last 2 years on another house? What you've done the last 2 years. Yes. Mm-hmm.
I have two questions about this.
Okay.
You mentioned the interest rate. Does that interest rate accrue on the?
It does. The balance increases. Yes.
So little by little you withdraw from that. I
Yes.
also see here it's tax free.
It is tax free. You can do anything you want to with the money.
So is this basically an annuity product backed by?
No, it is a home equity loan. You're taking your equity out of your house. It is a home equity loan, not taxable.
Can you discuss the MIP insurance?
Discussing it, FHA charges MIP up front, and they charge it monthly, and they do it on every FHA loan. So it's part of the insurance. It's based on the loan amount too. If you borrow 60% or less, it's 0.5%, which is a total different deal than it is when you are using a regular FHA loan. Yes.
Was there a cost or origination fee for the loan? What was it?
It depends on the loan officer. I don't usually charge origination fee. It depends on the loan officer, basically. But there are closing costs to this loan, yes. I did a $180,000 loan. The closing cost was $3,766. That's right in line with the purchase of a $180,000 house or any loan on any FHA loan on $180,000.
So you can pull closing costs out of.
Yes, not out of your pocket. Yes.
How is the MIP added? Is that just added to?
It's just added to the balance. It's added. I think it's added monthly. Yes, like it. Yeah.
So you could, okay.
Yeah. And it's no prepayment penalty. You can stop this loan anytime you want to. You can pay it off anytime you want to. And typically there's a chart. A 62-year-old can get 52.4% of the house. So they have 48% in the house of equity. So you can never get 100% of your house. If you're 90 years old and older, you can only get 75% of your house. So they're setting it up so you won't lose your house, okay?
So the interest in MIP is just added to the balance, what you would owe?
It is. It is.